So let me just start by saying AI is not going to replace your job. It's going to replace your job if you don't learn how to use AI on your job. Fighting AI is like saying, I don't want air conditioning, color TV, a smartphone, or an automatic transmission. I mean, AI is table stakes now.
If at some point Rocket says we're going to try and change the laws here and make it so that our automation can do everything, including originating a loan and closing the loan, then yeah, we are in jeopardy. We can kind of see some of the effects of AI and what we're doing. But give me an idea of where you think this goes and what can be replaced in our industries to use AI and maybe drive the cost of mortgages down.
In life, there's a blueprint for everything. There's no need to start over. Hear from industry leaders, those at the top of their fitness journey, and real estate gurus. They tell you exactly how they did it. All you have to do is listen, learn, and execute. This is The Blueprint with Brad Rice.
All right, guys, here we are back again at The Blueprint. And today you are going to be entertained and have a lot of deep information dropped by my buddy, KP, Kevin Peranio.
Thank you, brother.
So, let me tell you a little bit about KP. All right. So, he's the Chief Lending Officer and partner at PRMG, which is Paramount Residential Mortgage Group. He's responsible for leading the development and expansion of PRMG, which is a big company, by the way. He scaled their platform, helped them to get over $1 billion a month in volume.
All by myself.
All by yourself. Well, you had a couple people that helped you out. But I'm telling you, this company is a big company. It's a big player. KP is a boat of knowledge. He's also a board member for a group called Access 365 Lift, which we're going to talk about. It's a nonprofit organization dedicated to providing internships and opportunities for individuals pursuing careers in mortgage and lending operations. Mm-hmm. So really cool about that. It is tough to break into this business and be successful at it. But here's a guy who's super committed to the industry. I mean, he flies, I think, monthly around the world, not the world, but around the States at least.
The mortgage world.
The mortgage world.
Yeah.
Going to conferences. I mean, it's just about at every conference. But creating awareness about mortgage, helping people, entertaining, big groups of people on stage. So most of his time is spent running around, but he also is a husband and has 4 kids.
Just 4.
Yeah, just 4. Ages 6, 8, 10, and 12. 3 of them are girls. You know, he is headed in for quite the time of his life in about 7 years here. But, he's a true visionary, an operational leader, and a wealth of knowledge in the mortgage field. Welcome, my friend, KP.
Thank you, brother.
Yeah,
I
appreciate
for sure,
man.
Really good to be here.
Yeah, it's so cool of you to come up here. You and I saw each other a couple weeks ago in your cigar lounge.
Yeah.
And
in Corona del Mar with our buddy Rich and Martin and
yep,
a couple other people.
Yeah, it was really cool.
Yeah.
And
I don't come across like some bougie Wall Street banker, but I do like a couple times a month. Enjoy just relaxing. The main reason I joined is because I get home from the office so late. There's no food. So, I have to eat, and this is a restaurant, CDM restaurant down in Corona del Mar. And they have this private membership cigar lounge, but they also serve you. And my buddy Martin Warren, who is also an owner of a mortgage banker, Nations Direct, great company. He got me in there. And it's cool because we got to break bread together and hang out. And then you're like, dude, why don't you come hop on Blueprint? And I'm like, well, actually, I'm going to be up in Westlake Village with this PennyMac deal, and I'll be right there. So, let's do it that Tuesday. And you're like, sweet. And so that's kind of the main reason I'm part of that thing is because, these things materialize, after hours, which is another reason I'm on the road a lot.
Yep.
And this is my last day traveling. I have been on the road, I'm telling you, since January. It's been nonstop.
I've seen you.
I mean, crazy. I think I went a 17-day stretch where I came rushing home on Mother's Day, slept in my bed for just a few hours, and then turned right around and caught a flight at LAX to go out to Mexico for a week, and then New York for the cap markets. That was our president's cabinet in Tulum. And then to New York for the NBA capital markets and secondary. I mean, I have been blowing and going, man. But, I tell you what, I work from my phone. I don't own a laptop, right? You know how we talk tech a lot. We're both very passionate about it. And the world is flat. It's truly flat. and I work from my cell phone, and people are like, how do you not have like a screen? I'm like, I don't know. I just read and pinch and zoom and all the do stuff, and it keeps me mobile, and I stay connected, and I keep up with, all my stuff, and then also get to be, present with a lot of different things out there and kind of stay up with the currents.
Yeah, that's actually pretty incredible. And I do want to stop and kind of drill in there for a minute because I think there's a lot of people that travel for work and get burnt out or don't find that balance in life because, they've got family, they've got kids, but the demands of their travel for work take precedence. And so you manage that pretty well. You were telling me off camera here, before we started that, yesterday was the day your 6-year-old had to learn to ride her bike, and you were out of town.
Of course.
And so the major milestones,
Yes,
right?
yes.
But let's talk about that for a minute because how do people that travel a lot for work balance their home life with that?
You have to have an incredibly supportive spouse. And I think, I wouldn't say I fully have my house in order because, 4 kids and working and traveling all the time. I was telling you how magically all these milestones occur when I'm on the road. There's a tooth loose. It's probably not going to come out until Daddy gets back, but let's yank it out before he gets there. And it's just a petty bullshit that you deal with, at home. But all joking aside, my wife is a good mother, and Rebecca does a great job with the kids. And when I drive home tonight, I'm gonna hunker down for just under 4 weeks. We're gonna do a family vacation. We're gonna go to Park City for a week, and I'm taking my girls camping, actually not too far from here near Santa Barbara. So I do like this daddy-son camping trip last few years, and now we're doing a daddy-daughter with all these dads in the neighborhood. And I have 3 daughters, and it's hot. So
like Kachuma, where do you go?
I think that's it. Yeah.
Lake Kachuma?
Yeah.
Okay.
That's it. Yeah.
Yeah.
I've never been there. So, gonna come up here on a Friday and then 2.5 hours hustling back on a Sunday to hop a flight to go to Park City for a week. So I'm trying to my work travel goes in spurts, and then this presence, at home is kind of a spurt too,
So the takeaway from that is that you plan the family life too.
I do all the planning.
Yep.
Yeah. I'm the one that buys the properties, and for example, that house in Park City, we own 1/8 of it through Picasso.
Oh, you did that?
Yeah, I got 2. We also have one in Newport Beach Peninsula. And so,
okay.
So I'm not paying $4 million for a home, but I'll pay 1/8 of that.
Yeah.
And then, you get to plan ahead of time. I do all the planning and all the booking for all the flights, and I just handle all that because my wife handles all the stuff at home, and so, yeah, it's going to be fun, just to get away for a week and, just chill. I'm sure we'll be tearing each other's, hair out, before it's over. And then next thing you know, the house is empty and you're staring lovingly at your spouse. Like, what do we do now? I mean, that's one cool thing. I'm on the road and I hear all these people who've been through this, who've gone through this, and, giving me tips and advice. And, it's just, it's hard, but it's life. Life's not easy.
Look, I'm sure you've heard it all. Like you said, people give you tips and stuff, and I am on the sunset side of that life because my kids are older. My youngest is 22, and then I've got a 26-year-old, and then my son turns 29 this month. And I think the reason that most, and it's at least 50%, I think the statistics are higher than that now, marriages end in divorce is because you make life all about the kids, the family, and nothing about you and your wife anymore. And when you do that, you kind of lose the same interests, and you're not dating anymore, and you don't really.
You got to date. That's what I hear.
You have to do
all
it
the time. You got
and that's the only way. And then I'll add one more thing there that will be a little controversial. Getting through that period of time in their life where the brain becomes a little mushy, and you can't do anything right, and the chemicals are not acting the way that they should be acting, and they're going through this change, you've got to have a lot of patience. Some of that could be wrapped up in your travel, which does help.
Yeah.
And so you get away from it, and that way you appreciate the time together more. But I think that a lot of guys end up not being able to kind of get through that period of time where, who is this person? This isn't the person I married.
Yeah.
But let me tell you, on the outside of that, and my wife makes fun of me for this when I talk about it because she goes, I did not go through that. I'm like, okay, you didn't. But on the other side of it, it's really good.
Yeah.
It's really good. Now, then you remember, oh my gosh, this is the person I met, I fell in love with. And so, yeah, if you can navigate that and recognize it early on, then you're home free.
I've invited my wife to every show I've ever been to. I mean, we stay at sometimes really nice places, and but she's so ingrained in what her job is, right? Which I don't think she looks at it as a job. Maybe some days, but it's taking care of the kids. It's it's like the thought of like, oh my God, I have to coordinate. All these practices. All 4 of our kids are in sports. They're all in club soccer. They're all in flag football. The girls are in karate. Our son's in baseball and basketball. They have junior guards kicking off for the girls here soon. And so it's like, for her, it's like the thought of having to have someone else like get her scheduled when she's just in the groove and she's got it down, just like we do at our jobs.
Yeah.
Our careers. It's very it causes anxiety, and I'm like, yeah, but babe, we're going to Tulum, or I just stayed at the Four Seasons for 2 nights, with this pinning back event, and it's like, go to the pool or go to the spa or go work out, and it's hard, and so the dating thing is probably the best advice I've heard. I mindset coach with a guy named Steve Scanlon from Rewire every other week, and he told me this thing called the 10-6 method, and his kids are older, he's older, and it's like. Of course, like you said, I'm head of growth and sales and revenue, and so it's like I want to get up there and be like, make more calls and do more stuff and do more visits, but like at a 10, because I've been there and done that successfully. But it's like the way you deliver at like a 6, it just resonates and people actually listen. And I've tried to pull that 10-6 method into my house as well. It's like, do you want to be right or do you want to be happy? And so. We've had a lot less, arguments, and the only time our arguments ever get explosive is if we're drinking. And I've said, like, we had our 13th wedding anniversary. I took her to dinner, on a Monday night, and I'm like, if you quit drinking, this will be the last sip of alcohol I'll ever take in my life. I will do that, cold turkey. And she's like, you do it first. I was like, come on, I want to do it together. But the only time we ever like just blow up was, if it's been a long day of hanging out, super stressed, and you're both having alcohol, and then it's just gas on a flame. And so I really try and keep things at a 6 as opposed to a 10. I think about that 10-6 method a lot. And it helps in business, at life, at home. And I'm not perfect by any means. I'm trying to get my house in order. I don't know, I'm trying in this journey like everybody else is. And so that's been very helpful, the 10-6 method.
That's really interesting. I'd never heard that before, but that makes a lot of sense. The 10-6 method. I'm curious with the drinking thing though, because everybody is a little bit different when they drink, if they drink. I know a lot of people that just said, I'm not drinking anymore, and that's fine. That's great. I love it. And I've gone long stints without. And it's just conscious about
and you're
just my body and all that.
You're
sort
also
of thing.
very fit.
Yeah. And by the way, I don't drink on a school night. That's my rule. So obviously,
I try not to. I try not to, but I do. You know what?
Unless I'm on vacation.
I actually, you inspired me. I actually worked out today in the gym in the hotel. Like, shit, I'm going to see Brad. Like, I need to at least get a lift in. He's a fit as a fiddle.
I was going to say you look a little pumped coming in here.
That's probably the caffeine.
That's funny. But the thing is that like people act differently when they're drunk. I know me. Like, I'm happy. Like I unfortunately maybe a little bit too happy because my wife knows to take advantage of me when I'm like that. And so somehow, some way we wind up shopping for something. And I'm like, where I wouldn't like do that if I wasn't. And so she takes advantage of that.
I find there's a law of diminishing returns when you drink, right? So like the first drink and a half, max 2, you're okay at golf. You're okay at conversations. You're okay at disagreements. Might even get a little frisky in the house, And then the more you drink, I think it just deteriorates. And, on the road, a lot of us kind of collectively look out for each other and say, nothing good happens after midnight.
Yeah.
And so, but if you carry on until the bars close at 2 or in New York, 3 or 4, you're 6, 7 drinks in and you're like, I mean, you're going to wake up, on much less sleep, not restored.
Yep.
Maybe feeling like crap, and so I try not to drink on school nights either. I really, really try not to, and I also have a fitness coach I've been seeing for almost 5 years. We have biweekly meetings. He's like 2 drinks a week max. I'm like,
okay,
but it's in the back of my head, It's like, so I try not to do shots, and I try not to, what I'm saying. So I try and be mindful of it. I've gotten a lot better. I've actually lost About 20. Gosh, I've lost about 20 pounds since January of 24. Just trying to eat, portion control and not drink as much. And I picked up a different vice. I do those little nicotine packets, like the Zens and the Zolts and stuff.
Okay.
You get hungry, you throw one in. You don't want to eat.
Interesting.
Yeah,
Okay.
it's kind of cool.
Controls your diet.
Yeah, a little bit. So and robs your body of nutrients. So I don't know. Jury's still out on that one, but whatever. But yeah, man, I'm trying just like everybody else. Like nobody gets it right every day, but just what's the Raving fans saying? Get 1% better every day.
If you do that, you're going to be in good shape.
Trying.
Yeah, it's funny because my wife knows how to take advantage of me when I've been drinking a little bit, but we don't seem to argue when we're drinking together.
Good. Yeah. We do a lot less.
Yeah.
It's futile.
And like you said, we're not perfect. And by the way, when I talk about my wife going through the change of life, I firmly believe that guys do that too.
Totally.
Like there are definitely times where I found myself being irritated about something. I'm like, why am I irritated about? Saying to myself, why am I irritated about? Like, this isn't important, but I can't stop it. Like until it kind of runs its course within me, and then finally at the end of that, then I forget about it, and that's it. Women are a little different. They kind of can remember everything back to the day you met.
Oh my God. Yeah. My wife's a Capricorn. I'm a Leo. Like for me, everything's just, that's the past. Why you bring it up? Capricorn, it's like an elephant. It's like you remember that time my roommate and you said her hair looked good when we were dating? Right. I'm like, what was her name?
Wait, what dates are Capricorn?
Like basically January.
Okay, because my wife's December 22nd.
Yeah, so she's a cusp. She's a Capricorn.
So that's interesting, and I'm also a Leo.
Yeah. Oh, there you go. You know the deal.
So I know the deal.
You know the dynamic.
What's your birthday?
August 13th.
On the 17th.
Oh my gosh.
So yeah, so it's very, very close.
76.
A long time before that. I was born in '68.
Good for you, man.
Yeah.
You still look good.
Yeah. I'll be 57 this summer. Yep.
You got this.
Yeah. Yeah, it's no big deal. Whatever. Dude, I just saw, who did I see singing on stage without a shirt, 75 years old, rocker. Who was that? Oh, shoot.
Well, Stones are in concert. The Who's in concert. There's a couple tours going on right now.
I can't think of who it was. This is just last week.
Aerosmith's in concert.
Peter. Not Peter. Jesse's girl. Springs.
Oh yeah, Rick Springfield.
Rick Springfield.
Yeah.
Thank you.
Yeah.
Holy shit.
Looks good,
dude. He looks like he's 50.
And
he's 75.
And he's still talking about some girl he couldn't get with.
No, I think she'll be with him now. The way he looks. It's funny. There was a post, and the comments on it from all the women were like, I'd do him. All this stuff. And I'm like, that guy looks incredible. But it really made me think about just, the ages. Like, do you remember the show Golden Girls?
Oh, yeah.
Okay. Do you know how old they were in that? In their late 40s.
Really?
Yeah. Late
Wow.
40s, early 50s.
No wonder they were still surviving. Betty Davis still not too long ago, right?
Right. Because they just looked a lot older. But now, I mean, with all sorts of other things, too, that we've learned about the body and about, things that you can take to help kind of keep you youthful and that sort of thing. But the reality is, even though we're in worse shape because of the food we're digesting and the preservatives and all those things, the reality is we're living a lot longer because of the advent of, medical things and things that keep us, feeling youthful. And of course, exercise is a big focus now and so forth. But man, we look a lot younger at older ages. It's crazy.
It's a great argument for raising the retirement age and saving trillions of dollars with our broke-ass nation.
All right, let's talk about that, about the retirement age. So you're saying, look, let's push the retirement age back, make it older, because we'll save a lot of money, right? Obviously, very controversial.
Austerity measures is what they're referred to.
Right.
Every time some broke-ass European nation does it, there's riots in the streets, right? But people are working. People are working later in life. They're experienced. They have years of experience. People are living longer, to your point. And they are wise, and they're effective workers, and there's a knowledge inside them. And people are working. They're working longer. And so, I mean, look, my mom's 81. She just had open heart surgery in Dallas. She's not working, She wouldn't be impacted. But, the reason I bring it up is because we talk a lot about inflation, right? Because it impacts mortgage interest rates and where we're going and treasuries and all that kind of stuff. And so I always start from the same spot. As a nation, we are broke. So if I just think that before I say anything about anything that's going on, it doesn't matter what it is. It could be all the freaking riots going on in LA over, immigration, which, by the way, we need immigrants. We need a workforce, and so, or it's, our budget, which the government spending is the single biggest driver of inflation, by the way. It's not like how much we pay for eggs. You know what I mean? Like, great talking point for a little while.
I mean, evidenced by COVID and the amount of spending that was done. And I mean, it was going to happen. There was no way to avoid the inflation, the amount of money they flooded the markets with. So
they kept the rates too low too long, the zero rate interest policy, and they have it too high too long. But this is how the Fed operates. Like they only have so many things they can do, right? And so they have to manage monetary policy with just a couple rudimentary tools. Fiscal policy, government spending, is the driver of inflation. And again, no matter what the issue is, I just always start with, we're broke. We're broke. We spend more than we take in. We're absolutely broke. And so then I'll say whatever we're talking about, whatever the issue is, whether it's retirement age or anything, And this state's broke, by the way. I mean, absolutely broke. Like, we are at a $60 billion deficit, I think, last year. I don't know what we're on a run rate for this year. So how are you going to pay for all the stuff? You don't pay for the weather.
Isn't this the MO of all government entities, to run at a deficit?
Yes.
I mean, we don't run our families that way. We don't run our businesses that way. But that's just the way it is and the way it's always been. And so this conversation that we're having today about the deficit and that we're broke and that we owe so much money, will it ever change? Like, what incentive is there for it to change when we can just print money?
My advice for someone selling their home: number 1, do it yourself and save. Number 2, use HomePie.
HomePie makes it easy to buy or sell without an agent. I can list a home in minutes and start receiving offers right away from buyers.
When we discovered that we didn't have to lose $40,000 in agent commission just to upsize to a larger home, it was an obvious choice.
List your home for free at homepie.com. Keep your piece of the pie.
So when Greenspan and Bernanke took over the Fed, they really switched to what's called modern monetary policy. So monetary policy, instituted by the Fed, which is an independent organization, at behest of the Treasury Department, they have decided that if we issue treasuries and fund our government through modern monetary policy, which they control the flow of the rates and the money, that that allows for growth. Now, in their defense, our economy has grown quite a bit. I mean, pre-COVID, $19 trillion GDP. Last year we're over $30 trillion. So,
but a lot of that is just inflation.
A lot of that
right?
is innovation.
Is it additional spending?
Yeah, oh yeah, for sure. The U.S. consumer is 70% of our GDP. And so if you flood the markets with cheap money, we all buy houses. If you flood the market with cheap money, we run up our credit card bills. But then you got to rein it back in.
Different purchases. What I'm saying is that it's not like we are buying way more things. It's just the price of those things are way higher.
If you look at the recent GDP reports, they really aren't. I mean, if you look at, so the Fed likes to look at the personal consumption expenditure, the PCE. It's actually called the Fed deflator. That's their preferred gauge of inflation. So it's a little bit less weighting on housing than the CPI.
What else does it not include?
The main driver of inflation the last couple of years has been home price and auto insurance, oddly. And so at the time of this taping, the May CPI is coming out tomorrow. So consumer price index is coming out. And that has a much higher weighting on housing, like 40+% of it, of the CPI is housing and housing related stuff.
Okay.
Like owner's equivalent rent. If you were to rent out your primary residence, what could you get for it? And you know how they figure that out? They call everyone. They go, what would you get for rent? Like, they call random ass people who don't know, shit from Chinola, and like, what would you get for rent? It's kind of a dumb metric, but
how many of those calls do they make?
Like 2,500.
Okay, who is answering those calls?
I tell you what, I know what calls aren't getting answered. This is the funny one, like the whole job thing. It's like, there are a lot of people that have side hustles and second jobs and sell stuff on Etsy and maybe do other stuff. Hey, this is IRS call. Or, this is the government calling from the Bureau of Labor Statistics. Do you have a second job? Nope. Don't do anything else. You're like, I'm going to out myself and get taxed,
Or I'm getting unemployment.
Have 87,000 IRS agents looking through my freaking, PayPal account. But, so the data is kind of.
But even
wonky.
Jesse answering the call, this is what really kind of gets me. It's like, okay, somehow, some way, my phone number's leaked. It's public out there. So I get spam calls all day long. I probably get 15 of them a day.
Terrible.
I don't recognize the number. It's not on my phone. It goes to voicemail.
That's right.
I'll figure it out from there.
Mm-hmm.
And I'll mark. And then if I know it is, then I'll mark it as spam. So I block that one. But another one pops up in its place. Right? It's like a weed. So who answers those calls? If they're really answering, and how are we actually?
Boomers.
Are they?
Yeah, the ones that
that have
that run the
dementia,
HOA, the ones that run the
run
HOA.
the HOA, yes.
Yeah, I want to defund the HOA. Yeah.
Micah, you get calls like that, right? You get. Do you ever answer? You don't. I mean, he's 24, right? But that's what I'm saying. Who answers those? So yeah, to me they carry no weight. I mean, I've never given it any weight when I hear these things. But they do still drive monetary policy, even though
it's crazy. There's a lot of distortion of the data. There's a lot of soft data, survey data, but it's it's the best way the government knows to collect data. But prices paid, the actual prices paid component, has been trending down, and the Fed would likely have already cut, and would be most likely to cut for sure at their June meeting next week.
That's what you think's going to happen.
No, I did before the whole tariff thing. So now this whole new element of uncertainty has come into the scene, and the Fed has the luxury to wait, and so we suffer with higher rates, and in their mind, if we're suffering for higher car loans, higher credit card rates, higher interest rates on mortgages, in their mind, that's suppressing inflation. And so why not wait a little longer when they have, highly restrictive rates, right? So the Fed funds rate is between 4.25 and 4.50 currently. And the inflation rate, let's just call it 2.5%. That's just about 200 basis points of clear room to cut to bring the real rate down, right? So it's very restrictive. It's highly restrictive. Those are the words and terminology that they use at the Fed. And so, but if they wait a little longer and, prices come down because rates stay higher a little bit longer, they feel like they won. And, you see the president going at odds with the Fed all the time.
Yeah.
And then the president, gave the excuse to the Fed to go, well, you introduced all this uncertainty with tariff talk, so we're just going to sit back and see what happens, So it's got, So again, I think the inflation has been coming down, and then when rates come down, it'll start to run right back up again, right? Rates come down, people go out and buy houses, home prices run up.
That's right.
And so it's another reason that the thing that the Fed recognizes. What I noticed when the 10-year Treasury got down in the low 4s and high 3s, and we had a nice little rush of rates and a refi pop there in lock volume, I think the Fed realized too. But basically, I follow mortgage news daily, and when the average interest rate is at 6.4% or under, boom, there's a rush of demand.
Yeah.
And so I think the Fed knows how quickly we can mobilize as originators and lenders and ramp up business.
Flood the park.
And
Yep.
if you had lower interest rates for an extended period of time, well, then there's more demand that comes in, and there's more home affordability, and it starts to run prices up. So, I don't think the Fed's in a hurry. I think they want to squash a little more. They're willing to take us into a recession. They see recessions as a normal, healthy, cyclical part of our economy, ebbs and flows. They try and engineer what's known as the soft landing, where, rates come down gradually and we don't overrun back up or go in, inflation or run into a recession. I mean, honestly, we've been in what I would call is a soft landing for a couple of years now. And so, of course, as mortgage professionals, we want lower rates because we do more loans.
Of course.
But that's not of any interest to the Fed. They have to mandate, moderate long-term interest rates, full employment, and stable pricing, so inflation.
So we've seen in the last 75 years, there's been, and there was a chart that I had pulled up and had been floating around recently, where in the last 75 years, home prices have only gone down.
It's like
7 years.
Is it 7 years? Yeah.
7. So early 90s, I think it was 91, 92. and then which was after the '88 crash, right? And then of course you can predict the other period of time was 2007 through 2011. That's it.
Yep.
So when I'd like you for like the average person that really doesn't understand, what does a recession really mean to the average consumer?
I'd say if you're considering joining the AmeriFund team, it's a really good idea.
We as processors at AmeriFund Home Loans support the loan officers in every aspect of the loan once it comes into processing because we want them out there marketing themselves and originating more loans and supporting more borrowers.
Competitive commission plans are a given, and powerful technology is expected, but what truly sets us apart is our culture. We've built a solid support system for our loan officers.
If you're interested in joining the AmeriFund team, go to amerifund.com/careers.
Well, it's a huge opportunity to buy a home. And so, if 63% of America are homeowners, and the higher the age bracket, like boomers are a higher percentage, and, Gen Z, millennials, they're, Gen X, we're all, less percentage. It grows as we grow older and we all gain wealth over time. A recession is, if you are employed, is a humongous opportunity to buy a home. It is the time when the rates get the lowest. And it seems very counterintuitive, but a recession is typically triggered with a break in labor. So if people start to lose jobs, there is nothing more deflationary than when your income goes to zero and you cannot find a job.
Right. You can't buy anything.
You can't, yeah. And so when the unemployment rate goes up and people are losing jobs, that is a huge trigger of a recession. And that's when the Fed feels like they have to step in, because banks who are flush with cash right now, this whole commercial real estate thing was supposed to be a big deal. It wasn't a big deal, right? Yeah. Banks, especially the big banks, are flush with cash. So there's no systemic liquidity issue in the system. So the Fed also, on that respect, doesn't feel like they need to lower rates and pump more money into the system and get it going. These banks, these institutional, traders, they're the ones that buy treasuries. I heard yesterday, pre-COVID, we were selling, 22 to $27 billion of 10-year treasuries at a 10-year auction, for example.
I want to,
and now it's like 42.
Oh, is it that much? Okay, so I want to drill into that for a minute because most people don't understand what that means. So you mentioned this earlier. The Fed basically funds government, a big chunk of it, through selling treasuries. So they sell these treasury bonds that earn a yield, right, for the investor. But the major purchaser of those investments, the treasury investments, are institutional. Like you said, they're banks. What else are they?
Yep. So the U.S. Department of Treasury sells treasuries.
Okay.
And the Federal Reserve will set the monetary Fed funds rate. So they impact monetary policy. So banks can lend to each other at a certain rate, the Fed funds rate. They call it the overnight rate. So kind of a good barometer to watch is the 2-year Treasury yield. If that comes down, 2 years is a shorter time than 10 years, right? So if the 2-year Treasury is coming down, that's a sign that the smart money, the bond traders, institutional traders, are feeling like there's weakening in the economy. And maybe not necessarily a recession, but slowing growth. And that's when you see more room for the Fed to go, okay, we can inject more money into the system by lowering the Fed funds rate, which then banks will start to fill their balance sheets with cash because they're losing it because people are defaulting on car loans and credit cards and student loan debt and all these other things. People are losing their job. They can't pay for anything. And banks take the hit, right? Because they're the ones, like Bank of America banks in some form or fashion with 1 out of every 2 Americans. So whether it's a credit card, a student loan, a car loan, a savings account, checking account, whatever financial instrument, Bank of America, like when Brian Moynihan, their CEO, talks, I listen because he's saying, hey, we're seeing people save. We're seeing people spend more this year than last year. We're not seeing a weakening consumer. But what weakens consumers is a job loss.
Yeah.
And most recessions are triggered, with a job loss recession. So that's why the labor reports like last week are so important. It was soft, but not breaking, right?
Yeah, but even with these labor reports or the ADP reports, they're so far off every time, and they go back and they correct them all.
Yep.
Is there a time where they don't correct them? Like where they're way off and they go back and correct them? So, I mean, how can those be the driver of understanding where the economy is going when the reports are that far off? And to me, for example, ADP, largest payroll processing company in the country, how can they be off?
Yep.
It's all direct, like it's just electronic filing of all their companies that they support for their payroll services. Shouldn't it be 100% accurate?
Well, some would argue that it is 100% accurate. So
until it's corrected.
But ADP report is like, so Jobs Week is like usually the first week of every month, right? And so the ADP payroll report is kind of like the fourth tier of data, right? And so it's really just white collar jobs. It's companies that have ADP and give ADP data, and so it's not a broad barometer of the entire industry. So last week, for example, when it came in super light, it was supposed to be like 110,000 jobs created in the ADP payroll system, and it was only like 37,000.
Yeah.
So everyone thought on Friday the Tier 1 report, the top report, the Bureau of Labor Statistics was going to be weak, and it wasn't, because that's like part-time workers. There's birth-death rate ratio modeling numbers that go in there. There's survey data. There's the household survey. There's the establishment survey. So there's a lot.
Yeah.
And so I would say the third tier data report in that week is the JOLTS report, job opening and labor turnover. And even though it's just third versus fourth in ADP, it's much more highly regarded than ADP because you're seeing how many jobs are open. And you know what? We went from 7.1 to 7.4 million jobs open in America. That's a sign of a healthy economy. Then every Thursday, the Tier 2 data report. Every Thursday, we're very fortunate. It's like locked pipeline, like how many locks are done. That's how many fundings will be done at our mortgage companies. The initial jobless claims comes out every week, and that is someone lost their job and filed for an unemployment claim. And so to kind of smooth out to week, there's a 4-week moving average, and that number is around 1.9 million. It went up, so that was seen as softening. So you're thinking, okay, weak ADP, strongish JOLTS, weak continuing claims. Then comes out on Friday, the Bureau of Labor Statistics jobs report for the month of May, which is really the second half of April and the first half of May because it can't quite collect all the data in time, plus 95,000 revisions down from the prior 2 months.
That's what I was referring to.
It was okay, right? And so where the real correction that matters for the Bureau of Labor Statistics is a couple times a year. So states, okay, so instead of relying on the two surveys of the BLS report, the jobs report, the first Friday of every month, establishment and household survey, the states will file back and go, this is our unemployment claims made within the state. And then they give that data back to the BLS and they go, okay, you remember last year, like we were off by 883,000 jobs. So there are 883,000 less jobs than we thought for the whole prior year because the states came back and told us, well, no, this is who filed for unemployment.
Yeah.
So then it gets corrected. And so imagine if like every single report was 60,000 jobs less on that first Friday of every month. Rates
Everything
wouldn't have been
different.
It would have been different. So it's not a perfect system. It's the one we got. I'm blown away why it's not more accurate.
Yeah.
But those corrections, to your point, the trend has been to remove jobs from prior reports for a couple of years, not add them back. So the trend is definitely still a softening labor market, which means a recession is more and more likely. And so Goldman Sachs is probably the best at their recession watch data, and they're at 35%. Well, so they're at 35% chance of us being in a recession. So 1 in 3, right? So it's not terribly high odds. The Fed, when they come out and they say, we're always at a 25% chance that there's going to be a recession. So like to go from 25 with the Fed standard, and then for Goldman Sachs to say, based on all this data, we're at 35. They raised it to 45 with the whole tariff thing. They said if our effective tariff rate is going to be 20% across all goods, we were under 3 during the Biden administration. And now with where we project it to be over 20, we think there's a 45%. Then we cut a deal with the UK. Then we got on better terms with China, our biggest trading partner.
Yep.
And then they moved it back down to 35%. And so right now our effective tariff rate, let's call it 20%. That doesn't mean people are going to buy the goods.
Right.
Like we saw that happen all the time. Like gun to my head, am I buy some cheap tchotchke from China? Maybe not.
Yeah. Yep. No, that's very true. Especially with the tariff thing, because that was the initial worry was prices are going to go up. They're going to go through the roof. We're not going to be able to afford everything. And then we learned that a lot of companies had plenty of reserves of product that they could sell that didn't have the tariffs. And because they were removed so quickly with many of the nations, it had no effect. It was a net zero. Mm-hmm. China was the only one that was kind of still lingering out there, like what effect is this going to be? Because we get the vast majority of our imports from China. Mm-hmm. But I don't know that we've really seen an effect from the time tariffs were announced to now. Like if you just think about the average consumer and what they're buying every day, whether it's food or goods, or if you go into your Amazon account and you look at something you bought a year ago, you look at something that you're buying the same thing today. Mm-hmm. There's a modest difference where we saw the biggest increase in prices, and all you have to do is go through that exercise in Amazon. Go look at something that you buy regularly, look at what you paid for it in 2020. And then go through and see what you paid for that same good. Like if you got vitamins or whatever, mm-hmm. Look again in 2021, 2022, 2020. It was 2021 and 2022 where we saw the biggest jump in those expenses. Mm-hmm. And it was about between 50 to 100% for most things.
Yep. And that was a supply chain disruption.
But it remained.
Yeah.
It never disappeared.
You're right. And so we've been working through the supply chain correction for years. And we're finally at a place where I think we resolved it. I mean, the last PCE was, 2.15%. That's nothing, right?
So, but when you say resolve it, so it's interesting. So it's leveled out.
Yeah.
Don't
forget.
You say resolve,
hold on. Wages are growing too.
Yes, and so that's what I'm going to tap into.
That's the offset. So
it
wages are growing,
except for self-employed.
Well, at least with the report to the IRS. So wages are growing much higher than inflation is growing.
Right.
And so real wages, so let's just take some simple math. Let's just say these aren't exactly accurate numbers, but if wages are growing at 4% and inflation is only 2%, then you have 2% real purchasing power. So the offset to those higher price vitamins, those higher price
is your higher wages.
Is you're making more money.
I got you.
Which is why employment is the most important.
That's right. It's another reason.
Because when you go to zero, you can't afford shit.
Right. And you especially can't afford it because it's more expensive.
That's right.
But, it's a never-ending battle then. This thing just never changes. So that means in 5 years and 10 years and 15 years, it's not $20 minimum wage or $25. Now we're going to be a $50 minimum wage just to keep up with inflation. So It's constantly going up. And, it will not change based on the way that we manage the economy. It just will never change. There's always going to be somebody begging for a higher wage. That higher wage increases the cost of goods and services. That get passed on to the consumer, which then needs a higher wage. It's a never-ending circle.
It is. And the good news is that, innovation never stops either, right? And so look at Tesla, for example. So it costs the way they produce cars. It's a three-step process.
They price way down.
They literally print a car in a lathe, then they deck it out with, just think about it. It's just an electric motor, right?
Yeah.
So there's a lot less parts, and they finish it out. They actually have this standard in auto industry, how quickly can you make a car? Yeah. It's like the last mile. They can make a car in 6 seconds.
Yeah.
And then 4 seconds, and then 3 seconds. They can fit, they just print vehicles, right?
Yeah.
And now they want to go, robotaxi and have driverless. In a few years, maybe being oh, you drive? Oh, you still drive?
Yeah.
Oh, wow. You waste your time driving?
It's hard to imagine that, but it's happening as we speak. And I
let my car drive me here. I drive my car. I am driven everywhere by my Tesla, so I can work. And that's how I double my time, and I'm more
Wait, don't you have
productive.
to touch the steering wheel every
15 seconds?
Yeah.
Then it starts chirping at you.
Yeah.
But the whole thing with full level 5 fully autonomous driving is that you don't even need a driver. You can just chill out in the back.
Right, and so that's Elon's prediction.
It's being tested now in Austin.
Yeah, well, I know it is in Austin. That's correct. But his prediction is 5 years. That I don't remember the number. He said 80% of all cars will be driverless. I thought, okay, that's a little bit too aggressive.
He tends to get a little aggressive.
Right.
Of course, he's got a dog in the hunt.
Yeah.
But even if it's 10%, that's huge for GDP. That's huge for productivity. That's huge for growth. I mean, imagine how much more work you can be done if you don't have to like drive. Like, oh my God, I have to like watch where I'm going and focus and not work and not be productive.
Conceptually, you would think also accidents and that sort of thing would be down. Obviously, it has to be perfected. It's not perfect now. And if you see about the Waymo accidents and that sort of thing, it might freak you out. But the reality is, if you think about if you as a person had eyes in every part of your body on every side, front, back, sides, everything, you could see everything going on at all times and you stayed awake the whole time and there was no distractions.
And you still die.
Huh?
And people still die, right?
Yes, I understand, but you would think that that is a far better outcome than relying on somebody who may be inebriated, who may
100%.
Be distracted by their phone, who may be thinking about something, got in an argument with somebody. Like we're subjected to that every day when we get in our car and we get on the freeway.
There should never be a drunk driving death ever again. Our parents should be given a few more years of freedom when these cars drive people around.
Oh, that's a big one.
Yeah.
That's a big one.
Huge.
Yeah, especially look. My mom has macular degeneration in her eyes, or macular degeneration in her eyes, and she doesn't know how much longer she'll be driving. Now she only drives during the day when it's bright. She's got special glasses and all that, but it won't be that long before she can't do it. And boy, wouldn't that be great for her to be able to just jump in her autonomous car, say, "Take me to my
take me
grandkids."
here so I can walk around and enjoy nature and stay healthy, as opposed to like I just can't drive. I'm stuck at home watching TV, and then you just wither away and die.
So you're right. Look, innovation does bring prices down, and I do know that there was some target for Teslas to be sold for like $30,000 or something, which is So the probably the biggest thing that would drive prices down would be innovation, right? Other than that, there's no incentive, like higher wages, higher costs for labor, but innovation. So now you bring, now you go to your fast food restaurant and you only have one person there that's tending the machines, and the machines do everything. Cost goes down. Now you get a burger, back for $3, right, or whatever, through innovation, right? But other than that, we don't see much in the deflationary area as consumers.
I would say what's interesting is when we trade with China, we actually import deflation, right? They make cars cheaper than us. They make goods cheaper than us. They're manufacturing. They've been building for decades, and everything is cheaper there, right? And so,
isn't that due to labor costs being less?
That's part of it, but they're also highly innovative. I mean, their ports are completely automated. Their manufacturing is, it's not like everything that's made over there is like, some 12-year-old kid, with someone standing behind him with a whip, like they're high tech over there, right? And so we actually import deflation from China.
That makes sense.
And I think that's why this administration is saying, man, like, we're your best customer. We are the consumer of the world. Our wages are growing. We're still gainfully employed. And so if we keep buying your stuff, you can't, fiddle with and manipulate your currency. You can't manipulate the markets. You can't crush our auto market, crush our steel market, I've already crushed our manufacturing. And so we want something in return, which I think is a fair trade, which is why you see just this week and last week worked out a rare earth minerals deal, which allows automakers and phone makers to get the technology and raw components they need for us, for what little we do manufacture here, to actually continue. And then in return, we'll give them some semiconductor chips, and so they can continue to innovate. And so it just needs to be a little bit more of a fair balance. I do agree with that. The whole bombastic approach and like throwing a bomb. But you know what? It's like, how else would the conversation get started? I mean, I'm not a huge fan.
Have you read The Art of the Deal?
Yes.
I mean, it's his playbook. It's what it's been forever.
Yeah.
Right.
And it's working.
And it's worked for him for a long time.
And it's going to work for us when we are able to protect jobs here and protect certain things. And so we do actually import deflation from China. We import deflationary prices on goods. We just, I think there has to be a little bit more of a fair balance there. And so to your point, if we are paying more for things that we get overseas, but our wages keep going off, there's an offset. But I just want to say that, we're a services economy. So we actually don't buy near as many goods as people are talking about in all this trade war stuff. We want dining experience, which is why the tax break on tip income and is a really big deal, because our economy is so highly tied to services that waiters, waitresses, bartenders that provide us the experience that we want, which is the majority of what we actually spend our money on. which is domestic.
Yeah.
Let's put that money back into the economy, which is going to cost money, right? So how do you offset it? Well, if there's money being put back in the economy and the economy grows, the GDP grows, you outrun the debt and deficit. That's all the theories that they're trying to work through. And, hey, I like trying new stuff. Like I'm a change agent. I'm disruptive. I like trying something new. It's better than doing nothing. So for me, I want to see these things work, and I'm willing to try something new because we're broke.
Yes. All right. That leads very nicely into a discussion about AI and robotics. But let's focus on AI first because obviously your career, you're in the mortgage business. We can kind of see some of the effects of AI and what we're doing. But give me an idea of where you think this goes and what can be replaced in our industry to use AI and maybe drive the cost of mortgages down.
So let me just start by saying AI is not going to replace your job. It's going to replace your job if you don't learn how to use AI on your job. And so again, it is a base layer. It's already everywhere, and it's continuing to grow. So fighting AI is like saying, I don't want air conditioning, color TV, a smartphone, or an automatic transmission. I mean, AI is table stakes now, especially for large language modeling, right? Your ChatGPT or Grok or whatever you use, Perplexity, all the things. So we're getting answers very quickly. We're getting stuff very quickly. So I've been with PRMG almost 15 years, and I was asked by the two founders, Paul Rozo and Robert Holliday, to be their partner, and I moved here 9 years ago. A little over 8 years ago, in January of 17, I signed our company's Salesforce contract for our account executives in the wholesale and correspondent channel to be able to use Salesforce for prospecting. Then they invited me up, like, oh, thank you. They invited me up to the inn at the Presidio in San Francisco, and I'm sitting about as close as I am to Micah, and it was Mark Benioff, the CEO, and the Wired magazine editor-in-chief. And they were on stage talking, and they said, when, not if, when AI eliminates 45% of the jobs in the world, how are we as leaders going to reskill, retool, and shepherd our teammates into the next thing as opposed to just firing them and saving a buck?
Okay.
Right? And so in our business, I think what we're trying to do at PRMG is get more out of the people we have as opposed to constantly hire. Like every time rates go down, I got to hire a bunch of closers, funders, and underwriters, right?
Yep.
But if our industry can get out of that manual capacity model, right? Hire a bunch of loan officers, hire a bunch of ops people. If we can get out of that up and down swing, right? So you're not spending all this time churning people. I mean, just rates going down, caused this industry to go from 2 to 4.4 trillion in 21. Then rates went back up. So the lowest rates were February of 22, and then they shot up all the way to June of 22. And from that part, 50% of originators, loan advisors, are out of the business.
Yep.
Just rates going up. Not AI.
Yep.
Just rates going up, right? And so lots of processors, LOAs, underwriters, closers, funders, all lost their jobs. So we're about half of where we were a few years ago. AI today, okay, agentic AI, an agent, a voice bot. I've demoed dozens, right?
Me too.
It's already 90% effective than most originators are at that initial phone call and converting.
Yep.
Today.
Yep.
So 1, 3, 5 years from now, where is it going to be? It's going to be insanely
way better.
So how do we make our originators better by using agentic AI? How do we get more out of our processors and loan officer assistants when things like Friday Harbor come in and analyze documents as it comes in and basically pre-underwrites a file before you ever have to put it together and put it into fulfillment and then waste the lender's most expensive resource, which is underwriters, which are using AI to do more. Instead of 1.7 underwrites a day, you can get 6 underwrites a day. So the idea is compress time, get the costs for production down at all levels. And by the way, the MBA puts out a really great report, and they update it every month. The cost to produce a loan is, let's just call it $12,000, okay? $9,000 of that is loan officer commission.
Mm-hmm.
So, including the branch manager. And
right.
So
all the overrides.
So a lot of tech leaders. I mean, you look at Rocket. You look at how they pivot away from their older leadership, and they brought in Varun, and they brought in Dan Sigorka, and they brought in, Katie Sweeney, and all these people to come in and work on AI as part of their, they're mostly consumer direct, but they have a TPO channel as well. But they're working to get to more borrowers in an AI fashion, and they are chipping away at loan officer commission.
Right. So in what you just said, you said AI can replace a loan officer, but we're going to talk about that for a moment.
Or make them
but
do
you said
more.
they can.
Or,
I get that
yeah.
that's the take on it. But
Correct.
they could replace a loan officer. They could replace an underwriter. They can replace a doc person and a funding person, right? So potentially it could do those jobs. Where I think the only insulation is that exists today, and who knows how long, maybe we stave it off for a year, not a year, for 5 years or 10 years, is that AI can't close a loan because they don't have an MLO number. They don't have an NMLS number. They're not an MLO. They're not licensed.
What if that changed?
That's what I'm saying. How long will that be? Is that 5 years? Is it 10 years? Who knows? Right now, today, you have to have an NMLS number as an MLO, a mortgage loan officer, to be able to close a loan. That loan officer's name and license number have to be on that loan to close it, whether it's a purchase or refi. That's the only insulation that I think exists today that prevents the replacement of a loan officer. I'm not saying that we're not in a position where AI is capable of doing this yet, but I'm saying fast forward, maybe it's a year away, maybe it's 3 years away, when not only is AI able to convert the sale, but can actually do a better job of researching based on somebody's parameters, on their qualifications, what is the best loan for them, do the loan comparison, show them why, and then show them how to save money on that loan and do it at no cost.
Yeah.
Right?
Yep.
And so if at some point Rocket, or wherever the biggest giant is, which is them right now for a retail direct, says we're going to try and change the laws here and make it so that our automation can do everything, including originating a loan and closing the loan, then yeah, we are in jeopardy, right?
Well, let me say this. The circles we run in our audience are good originators. So I'm not really worried about people watching this. I actually would be shocked if there's anyone that watches this that would be even remotely offended and start getting defensive.
Oh no,
right?
we're obviously speaking hypothetically, but you got to keep your eyes open.
Totally.
Like and we're not the on the edge of the innovation, right? We're accepting the innovation. We're looking at it going, how can we utilize this? How can we use this to help our loan officers? Use it to help our ops people? Like that's what we're deploying in reality into our companies. Yep. But what if? And seeing what's happened with AI in 6 months. And to go, oh my gosh, what if this could happen? This could be the future. So we have a responsibility as business leaders to figure out how we're going to innovate around that so that we can keep our good people, keep them into retirement.
Absolutely.
Right.
So I'll give a couple examples that are very defensible positions for us as business leaders to use AI and protect all the people I just met out in your office, So there's a couple things. So again, learn how to use AI on your job. So us as a lender, it's up to us, and we are on the forefront. Like I'm seeing all the latest stuff. That's why I'm on the road. And I get invited to invest as a venture capitalist in some of these things and pick winners and then bring it back to our company and generate revenue for that project. And so, I'm definitely part of that. There are other lenders out there that do the same thing. And what I would say is, I heard this last week at Eddie Perez's tag event. Instead of saying database, Chris Vincent over at Windsor said a pretty cool thing. He said, call it your portfolio, right? So your contact list, your portfolio, your consumers, that's actually a very important thing, right?
Sure.
And so whether it's your past consumer or anything that you're growing, protecting that, treating it like your portfolio of servicing or your portfolio of stocks, nurturing it, watching it, making adjustments. If you control the consumer, the lead, the database, the portfolio, you have a lot of control. And then if you have AI on top of that, you can use it to convert that portfolio. So where the rubber meets the road, the trigger bill legislation just passed committee yesterday. And so trigger leads will go away, all the phone calls, but now it'll be bots calling.
Wait, go back to that.
Yeah.
So you're saying trigger leads are going away?
Well,
let's first explain what trigger leads are.
Yeah. So
if you're applying for a loan and somebody pulls your credit report, that becomes
trigger
data that companies buy. We call them trigger leads. They get that information, your information, then they're able to reach out to you. That's why when you get your credit pulled, whether it's for a credit card or an auto loan or especially a mortgage loan, all of a sudden, if you're not on the do not call list, your phone blows up with everybody trying to get your loan. Dozens upon dozens. Have you ever been on LendingTree, which I don't even know if that's a big thing anymore. But
yeah, I think it is.
Okay, perhaps it is. We don't run into it so much anymore, but it used to be really big.
Because we're both community lenders doing purchase business. That's our vibe, right?
But if you go into LendingTree as a consumer and you enter your information in there, forget about it. Like you can't turn off. You got to turn off your phone for like 6 weeks because it just never stops ringing.
Yep.
So, but that's what a trigger lead is. So what happened on the Hill with trigger leads?
So there's some legislation that's been going through. It almost got into a bill on the National Defense Act last year. The big priority in D.C. obviously is the budget. But I think by July 4th, we'll have a big old celebration, one big beautiful bill, and we're all done. But there is trigger lead legislation that got out of a House subcommittee this week.
Okay.
And so that means it's just looking for a bill to attach to that would get passed and then go to the Senate, right? And so what that legislation says is that if you are the originator or you're ultimately the servicer, you're the only ones that really can use triggers, okay? So the credit triggers. So then let's say that passes and that goes away. So now the new annoyance is dozens of robotic agent bots calling everybody on the planet going, are you interested in buying a home? You want some equity?
Right.
Want a loan? So not even a trigger off of a credit, but just calling. I mean, imagine, we get all these phone calls all the time, but imagine there's a way where, it shows up on your phone and it says, save thousands on your mortgage, and so instead of just a random number scam likely, you actually see something that piques your interest. Mm-hmm. You pick it up, and now you're talking to this Australian accent female, Jessie, and you're talking to it, and you're like, oh, okay, yeah, I'll give you some information. Yeah,
can you give us an example what that might sound like?
Yeah, no.
I want you to try.
I would fail at that. But so now there's going to be a lot of bots calling. So that's a new annoyance. And so where to be TCPA or CCPA, which is basically Privacy Act stuff, right? Consumer Privacy Act. You need the borrower to opt in to allow for those phone calls to happen, okay? And so if you control the portfolio, you control the contact, you control the database, you have an opt-in process, then you can employ your voice, agentic AI, to help call and go, hey, just want to let you know, Brad's got this new podcast out. He's got this dude KP on there, and they're talking a lot about stuff that I think might be interesting. And by the way, if you need some help with the mortgage, just let us know.
Yeah.
And then they'll go, okay, what can I do? And then the bot literally just has a full-blown conversation, right? And so where I think the agentic AI defensible part for an originator is that you still control the lead and the opt-in process most importantly.
Let's talk about the opt-in. And I do agree with you, by the way, and I think you're right, and I talk about this all the time.
But if you're a servicer, if you're Rocket and you own one in 6 mortgages, you already own it.
You already do.
So
and if you're a servicer especially.
Yeah, so if you're first-time homebuyer hunting like all of our teams are in the community, which good news is, with rates kind of remaining elevated, Q1, 81% of business in the industry is purchase business. Yeah. So, not worried about it as much when you're a first-time homebuyer purchase money hunter because they're
not
really,
that ecosystem
They're
yet.
not on someone's radar
yet. But then when they are, then...
So then, so right now the bots I hear, they ask for income, they ask for information, they don't ask for social security number, they don't talk rates. So they're doing unlicensed activity. But let's say a state says, well, we don't mind if an agentic AI bot has a license because they're unbiased. They're not going to mess up. They're going to listen to the consumer. They're not going to be salesy, which is what regulators think we all are. Like we're just convincing people to spend $450,000. Doesn't work like that. But I could see licensing being allowed to an agentic AI bot because there's no bias, because it's tech, and you can program the tech to be less predatory than maybe a human might be. We aren't like that, and we couldn't fathom thinking like that. Yeah. But regulators are always fighting the last war, which is 2008, where we're the bad guy.
I definitely think that becomes a discussion. I don't know if it.
I don't know if it
becomes license, but getting around the need for license. Licensing the AI probably doesn't make sense because it's always changing. It's not like you're licensing Jessie the AI. She can change tomorrow. You just reprogram her and teach her different things. But But I do look. We're definitely in agreement that you got to use AI. In fact, we're right now deploying Audible AI in our database, in our book of business,
Your portfolio.
and
Shout out to
testing
Chris.
it. But the opt-in process is one that's a little elusive, right? And so I'd like to maybe talk about that for business people, because business people, I don't care what industry you're in, mortgage or otherwise, this opt-in thing is a big deal.
It's a big deal.
How do you actually get somebody that's been in your database that you've done business with maybe years ago, but you haven't recently, that knows you, but they haven't truly opted in? How do you get them to do that?
The easiest way that I'm seeing is just via text. So, or on your marketing, right? So, I've seen there's a technology out there called WISP, WHISP, which can either be a hyperlink on any of your ads, or it could be a QR code if you want to use that. But the bottom line is, if a consumer sees something that they like and they click on your ad, and it will shoot them a text on their phone, and it says, "Hey, to get more information, just hit send." It's very simple. It's seamless. And you're like, okay. So you hit send, boom, opt in, done.
How long is that good for, by the way?
That's a great question. So probably the most conservative opt-in time frame I've heard is 3 months. If you're a servicer of loans, they say 18 months. Some will argue forever.
Because you're in monthly communication with
it's
them.
your asset and liability. And so, it just kind of depends. What sets that is litigation. So when Facebook got sued and lost, the TCPA laws got really tight everywhere in every industry, not just ours. And so, if someone opts in and says, "Yeah, I was interested in hearing more about VA loans from Brad Rice and his team," and so I sent a text back, and here it is in writing, and you have an audit trail, then you can send your bot or your people or your team.
But that's not an easy thing to do.
It's not.
It really isn't.
It isn't.
And so now let's say that we did a loan for John Johnson 6 years ago. John knows me. I mean, he's been getting my postcards in the mail. He knows who I am, but I want to reach out to him because I know that the loan I did for him is above market and I could refinance him today. But John, for some reason, saw something I posted online. He didn't like it and he doesn't like me anymore. But I call him to tell him I could refinance him because we had a good relationship, and he gets pissed. He's like, "Don't call me." And now he goes after me because he didn't opt in for that phone call, right? I mean, that's the reality of things that could happen.
Totally.
It's really so. I had been sending him stuff, but he never replied. He didn't do the he didn't do the text opt in. Like getting somebody to actively opt into something that they're not actively involved in is almost impossible. It's almost impossible.
That is the name of the game.
Yeah.
In this brave new world, especially with AI.
Yeah.
It's how does your marketing, how's your digital marketing pique someone's interest to where they want to see you? Are you using Social Coach? Are you on social media? Do you have a presence? Do you have other ways to get to them? We just rolled out at PRMG Mesa, and it's a credit card, okay? And so you think about like your servicing statement once a month, or your postcards, or your social media, which may or may not become white noise on the Instagram storyboards or whatever. But a credit card, if you get someone to take on this rewards platform that gives people points for paying their mortgage. That's what this card does. You get rewards points for paying the biggest payment of your... No, it just started.
There'd been one years and years ago.
So Built is for renters.
And I'm talking 20 years ago.
So Built is for renters.
Yep.
And Mesa is for homeowners.
Got it.
And it's a credit card that gets... Now, you don't pay your mortgage, it's a credit card, but they verify you made the ACH payment.
And they're giving
drop
you points
rewards.
for it.
And the whole credit card is geared around homeownership instead of dining experience. So think how sticky a credit card is. You probably have the same 2 or 3 for years, right, in your wallet. And so you're constantly using this card because you get 2 times on gas or 3 times on this. You get a free Costco membership at the gold level, for example. You get all these other little perks, right? And so now you have this platform that is around home ownership, and you're at top of mind every time they use their credit card. That's another thing, right? I'm not saying it's like this magic bullet, but it's just one more thing to add to your
innovative.
arsenal. It's totally innovative, right?
Yep.
And so, but the thing about the AI bot, and this is why I think it's going to be the new trigger lead phone call annoyance, is there are going to be people who use the bot to call all the time, and they're not going to care about an opt-in. And so now you're going to we get all the calls all the time anyway, right? So now you get, I get so many scam likely calls on my phone. It's not like I'm like, hey CFPB, hey state of California, sue them for $5,000, sue them for $5,000. I mean, I can type block and spam and all that kind of stuff, but I don't know that anything ever happens, and I get all the calls anyway, right? So I think there are going to be some unscrupulous actors, lenders, that are going to send out calls and use an AI bot to make calls at scale. So at our company, we've only been around since 2001, but we have about 800,000 records, okay? Hey, bot, make 800,000 calls by Friday.
Yeah.
My team can't do that.
Yeah.
And we would, so we also wouldn't do that without, and the TPO things without. So we want to roll it out for our TPO clients.
Right.
We're rolling out retail first so we can test it out and see how it works. It'll take us some time to get there. But we have 400,000 records in retail.
You scrub it against a DNC.
Yep.
Really
we'll
is what you do. And then
try and get an opt-in.
Then you try to get the opt-in.
If it's in our portfolio, no brainer there.
You're talking about your servicing portfolio.
Yeah.
Got it.
Yeah. That one specifically.
Yeah.
That one you have, you own.
Yeah. You have an ongoing business relationship with them.
Correct.
For sure.
And so I think a lot of servicers are going to start there. And I'm telling you, I've seen them perfect the conversation logs, show more empathy here. I don't like that this person said that they need money because someone in their family died, and you just okay, well, give me some information. Show more empathy, and then you train it that the bot gets better.
That's right.
And so it is getting better, and it will get really, really good. And it's an infinite race. AI is not stopping. It's not like who's going to win the race next year. It's like it's going to get better forever, unless we blow ourselves up. But I would just say that that opt-in is super critical. Your marketing is critical. I think consumer experience is critical. And so how do originators build a consumer experience? How do you build? We're all of our circles, all of our audience, all of our teams. We work together with a real estate agent, and we each tell each other how good we are to get you into the home, and we have ways to help you better than others can,
right?
Better than 9 out of 10 out there, right? And so that's how we sell our wares.
Mm-hmm.
But what if there is an online experience? Why do you think Rocket is always 1 or 2? Because they're marketing out there. Yep. They have a great brand at a high level, and people are like, I just need to call them, right? And so and then they work on their consumer experience. The consumer experience getting better takes away from the power of our originators and real estate partners, because they're the ones that provide the experience. We know that at the local level. But I'm telling you, all these tech guys, they've been trying for years, and they keep getting better and better at it. They're trying to steal our local business.
Mm-hmm.
And they want to build a borrower experience that's pretty damn good.
Yeah.
And so we want to have a tech solution to help our consumers, but then pull them into what we know is the best experience, which is a local originator, a local realtor, working on them, especially for first-time home buyers. They have a lot of questions, right? So I don't know how much they.
Yeah, look, I think you're right, and I think a glimpse today is exactly what you are describing, which is the local experience. And I tell, and Micah hears this all the time as we record stuff. I say all the time, if you're a first-time home buyer and you don't qualify for a loan, or you want to and you're not sure if you do, the best person to call is a local mortgage broker that's 100% commission.
So what if they call you and you don't pick up the phone?
Well, that's a problem.
Right, but if your AI bot calls, then it's always there.
That's right. And if they're answering, then it's much better. That's right. Of course, it's a better experience.
And that's a simple use of AI.
But the point being is that the AI is not motivated. It's not motivated like the loan officer.
100%.
So the AI can do the function, but the loan officer has the motivation.
100%.
So this is what I say all the time. I go, you want to buy a house. Your loan officer who's 100% commission is going to figure out a way to make it happen. They're going to be incredibly inventive and be with you side by side. Even if it takes a year to do it, they're going to figure out how to get you into that. So the motivation side is probably...
I hope AI isn't motivated, or else Skynet's going to happen and they're going to freaking kill us.
And yeah.
It should be about motivation. Just complete task.
I think if you're normal, you just think about those things. Like, is it going to happen in our lifetime, our kids' lifetime? Like, that seriously could happen. Have you seen recently... Optimus, the robot stuff?
Oh, yeah. The second it comes out, I'm buying this robotic AI Optimus from Tesla. It's going to do laundry, which my wife hates. It's going to make us drinks and play guitar at parties. It's going to drive us if I need it. I guess the car will drive itself. It's going to grab the mail. It's going to do the lawn. It's going to clean the pool. Like, and it's never going to stop until I charge it. Like, I am 100% all in on that. And do you know how many people are in the world? You know, let's call it 8 billion. Okay. Tesla, of course, you know, Elon Musk, he thinks it will be 20 billion robotic AI, you know, machines out there. Now, think about the military. You know, I could see that.
I mean, these sci-fi movies, they become reality very quickly. So let's not talk about the dark side of that because we go down a real big hole, but let's talk about the bright side of it. And you know, like you said, hey, doing all these mundane things that you don't like to do and so forth. Certainly,
or can't do.
We could then,
I can't play guitar. I tried. It's so hard.
Or that. And you can't speak in an Australian accent either. So you could have that done for yourself too.
Good day, mate.
Yeah. Don't do it.
Throw another shrimp on the bobby. Who wants some Spam or Vegemite?
Oh God! First of all, if I try to do it, I'll sound like I'm an Indian, so I'm not going to bother. But you know, when you think about these things and you think about what other jobs they can replace, we could go down that hole. But what I want to talk about is these robots that are becoming very realistic. They're starting to put I don't know what you want to call it, skin on them, masks on them, and so forth that look real. The facial expressions, the blinking of the eyes, the little pores, and like all sorts of things where it's beginning to get to the point. It's very close where you won't be able to tell the difference between a human and a robot, and that will happen. It's going to happen in the not too distant future, right? One of the strangest things I heard was that there'll be robotic mates.
Yeah.
So you won't be cheating on your husband or wife anymore. You'll have an agreement to have a robot take care of whatever it is that's causing you to want to think about cheating.
But that is still mentally cheating. That's just porn, right? Like you know, I have a give up list, and porn is on my list. If you watch porn, you're more excited about someone that's not your spouse, and it takes away from that part of your relationship. So that's just another version of that to me.
I hear you.
Strip
Let's
clubs,
say you're single.
Same thing.
Let's say you're single.
Okay,
I just think it's
let a player play. I guess I don't know.
I think it's a stranger thing, but you start to go down this path, and you think about the future with all these changes, and you go, "Holy smoke! Who would have thought of that?" So I just happened across a video. I think it was on TikTok or something. I'm like, "Oh my God,
it's creepy."
Like,
yeah,
what? This is like for people to even think about this. That could be reality. Somebody like there's. Yeah, I don't know if I should say it. Yeah, they're not going to listen. I have a kid that lives across the street from me who's 35 and still lives at home, never moved out. Okay? He just doesn't wait for his parents to pass away to take a house, and that'll be it. I don't know that he's ever had a girlfriend. I don't know any of that stuff. I have no idea, right? But I think about, like, if there was a mate that you don't have to, be awkward. You don't have to feel awkward. You don't have to do any of those things, and you just order it.
Yeah. Maybe he needs a sex bot. I don't know. I mean,
it's
if 45% of the jobs are going to be eliminated, what do we need to do to make people survive in this world? Here, have your video games, have a sex bot, have a universal wage, have a nice day, less competition. We'll go do the real work, and if you're happy, that's fine. You do you. It's a free country. And then we're going to come over here and build businesses, help people get into houses, create multi-generational wealth, because that inspires us. And that's okay. I'm not judging.
That might be the way it is.
Yeah,
we don't know.
I'm not judging.
All right. I do want to ask you, because we are living through this time right now where we are experiencing riots again in LA. And
peaceful protests.
Yeah, they call it that. Sure. Until you see all the real video out there. And you're like, what's so peaceful about throwing rocks through police cars?
By the way, all the cars are being burned were Waymos.
I know they were. Did you see that? There was every single one of
Elon's
them.
like, yes, that's competition.
Oh God, yeah. But I feel terrible for the local business owners that are getting looted and they're broken into. And there was a guy at I think it was a 7-Eleven. It was a convenience store that was trying to prevent people from coming in the store, and he had like a golf club or whatever. And then they came back with more people and they just overwhelmed him. And it's just very sad to see the lawlessness going on, and the burning of the American flags, but yet still saying we love America, but waving other flags. And I feel like what happens here is that we've got the protesters that are really protesting for real life reasons. The family, the husband and the wife, came here 25 years ago. They had a green card, something happened, they lost it, or they had a visa, something happened, but they've been working the steady job for 20, 25 years. They've raised a family here, et cetera, but they're on the ICE list because they lost their, they've been here. They were originally here with, legally, but then they lost their statehood or whatever it is, and now they're on the list. Like, I feel terrible for those people. I can understand them protesting, peacefully protesting. But what happens is you've got these professionals that go in and they take advantage of this. And so these are these vigilantes that go down. They don't care about the protests. They don't care about anything like that. They go down, they loot, they disrupt, they cause people, they create the pain, they throw the bricks at the police and all these things and cause the havoc. And we're all paying for that. And to see the politicians endorse that just doesn't make any sense.
Yeah, human nature is a messy spectrum, and politics, I think, takes advantage of the worst of it. And what I would say is, at the end of the day, we all know what's right and wrong, right? It's wrong to throw a rock at a police car. It's wrong to burn a car. It's wrong to break a window and break into a home. It's also wrong to deport someone, in my opinion, I think most people would agree, to deport someone who is an honest citizen with no criminal history and they're working here. And to my knowledge, that's not what's happening. My knowledge is that if there are ICE raids, it is on someone that's done something criminal, which is different than like a speeding ticket, like a civil fine. So I have not seen the federal government break the trust of getting rid of and ripping apart a family that's been here for 25 years. Now, what they did do, which I was against, I was in New York and D.C. lobbying against this, met with the FHFA director, Mark Pulte, and, getting rid of the H-1B visa and not allowing non-permanent resident aliens to get an FHA loan, I thought was the wrong move. Now, they are still allowed, instead of 3.5% down, 5% down, they can get a Fannie or Freddie loan. But I feel like the biggest home ownership hurdle is the down payment. And so an FHA loan, which is better priced, by the way, than a conforming loan, allows for 3.5% down, which can be from a gift. Someone who is on an H-1B visa has raised their hand. They said, here I am. Here's where I live. I'm not hiding.
Filed all the paperwork, got the approval.
Are they on the path to citizenship? I don't know. Maybe not. But they're contributing to society,
paying taxes.
They're working. So I think that person should get a home. And I think where the word immigration has been so politicized, like if you just take off your beliefs hat, like we need a growing workforce here, and immigration has helped us grow as a country and have the highest GDP in the world. And so does it need fixing? Is the system broken when, millions and millions of people can just come in without waiting in line properly and being
vetted? And that's the biggest part of this.
I don't know where it needs to land, but I think much like the tariff approach, I think the immigration approach by this administration is like, let's cut it all off, and now let's see what we're working with, and let's see what we had. And by the way, every president does this. I mean, you guys know, like this isn't. So
Obama did it.
He was literally called the deporter-in-chief.
I know.
He deported 3.3 million people.
People
we're
remember
close
this.
to that now, right?
I know.
So it goes back to we're broke. Okay. So when Obama took office, this was in 2008 when we really were in a global financial crisis, and we were broke, and we were going broker, and that is a problem. And so I know more broke, but I wanted to do a play on words.
Right.
Broker. Yeah. So every time the economy gets into the nation gets into a spot where like, hey, our GDP is not near as high. Like we're at 122% DTI as a country. I think 129 at its worst recently. So we have more debt than we take in income. We can't even do loans for, anyone, maybe you get a VA IRL at like some weird number, 67
65 or whatever. Yeah.
But like 43 is kind of the standard. We're at 122 DTI.
Yeah.
I wouldn't lend a shit, right?
Right.
So every time we get a little too broke, every president from both parties pulls back the brakes. Hold on. We cannot flood the system for all these undocumented people that don't pay taxes.
Yeah.
We don't know what they do. We don't know
And
where
they use
go.
the services,
And
so
they're
there's a
using
cost to
service.
it.
California's broke.
Yep.
For that reason, it's huge. I'm from Texas originally. They're not broke, but it is a big strain on the system. So every president will just take a pause and just hit the brakes a little bit and see what we're working with, and then try and, okay, now what do we need for a workforce? How do we grow? And so they all do it.
Yeah. So, but probably the biggest effort toward this of any presidency in our time is Doge, right?
On paper, but look, I'm not poo-pooing it. I mean, they saved 180 billion and counting. We're going to spend, we just raised our debt limit to $4 trillion with a $3.8 trillion budget we're passing. I mean, it's not nothing because it's a lot of money, but there is a lot of inefficiency. I mean, I don't know anyone that's ever said, man, the government's so efficient. I can't wait to give them more of my money. Right. Like, I literally don't know a single person ever said, so this is what you do.
Yeah.
Like, this is like, and then people are mad because they're doing it. It's like, what? So I just, that's where human nature gets so warped emotionally that they're just against something that might even make sense, or they would do something like burn a car or break the windshield of a police vehicle? Are you kidding me? I would never. I mean, it's like, that's wrong, and we know it. You want to have a peaceful protest? Go for it. That's in our Second Amendment. Like, go for it, That's what it should be. It's not, because there are some people that are so emotionally warped, human nature, and they're being taken advantage or paid, and it sucks because, the Democratic Party, especially on the liberal side of it, I would say the majority of America is socially moderate. And about 65% of this country is socially moderate and fiscally conservative.
Yeah.
And so when those principles get hijacked, either way, I mean, I read what some people post on social media, and I'm like, you don't get how it works. Like,
no,
it's not.
But they're just completely
Okay.
indoctrinated by what they ingest.
It is not okay to throw a rock at a police vehicle's windshield. It's not
Yeah.
okay. Like, look, I'm not some little goody-goody. Like, I didn't grow up with beans, and I'm not, like, I've been around some shit. I've seen some stuff. Like, I know when there's a time to fight. I know when there's a time to defend yourself. Like, I've seen some stuff. That's for another podcast. But I'm just saying this isn't the right way to do it, because what happens is the good part of the message is now being hijacked by and attached to something that's wrong.
Yeah.
Clearly wrong. It's clearly wrong to burn a vehicle.
And then it turns people off.
It does.
The normal people. It just
And then Trump wins.
Yeah. And
You know,
not,
like if you don't like Trump, which like 45% of America just does not like him. He won in an absolute landslide. You know why? Because of riots in LA.
because they were sick of it.
Because that
That's right.
party gets attached to this,
To
and
all
people are
this
like,
crap.
you know, it's like even if there's a good underlying message, like, hey, let's not deport that person who's been here for 25 years. Let's think this through. Let's think this policy
But
through.
it doesn't come
And it
down
gets
to
lost.
debate like that.
It doesn't. It never
yeah,
does.
Just completely lost.
Yep.
All right. Our industry is a little bit difficult. It's difficult to break into if you don't have experience.
And getting harder.
And it's getting harder. But you are part of something called Access 360 Lift.
Yep.
And with this, you help people to get into the industry. Tell us a little bit about that.
Yeah. So
Are you a tech investor looking to shape the future of real estate? HomePie is the #1 for sale by owner marketplace, and we are revolutionizing the way homes are bought and sold. I'd love to hear from you. Just email invest@homepie.com and let's chat. Now back to the show.
Paul Gelati used to work at a lender in Northern California out of Novato called Pinnacle. And he was their COO and in charge of fulfillment. And what he saw, as a gay male, by the way, he saw that there was a part of society that doesn't make their way into our business. And so it was like, let's have some intention of finding people we wouldn't normally go hire, right? How would we go hire someone that is maybe not college educated, maybe not even high school educated, maybe LGBTQ, maybe someone that to quote Eddie Perez, it's kind of funny. He talks about like the leadership in our business, and look, I'm just repeating something. I'm just saying the leadership in our business is male, pale, stale, and frail. Now, that person is not going to go intentionally look for it necessarily, unless they really have that in them, to go find someone and cultivate them into a processor or a closer or a funder or an originator in an area where they don't normally look. And so the whole idea was to find people who have value, take a course, show excellence and drive, and they go, here is a new hire, train and on a pedestal for you to take into the business. And that's turned into an educational platform. Access, I'm on their board. Paul asked me to be on their board. I'm on 4 boards that I can recall off the top of my head, just on things in the business. And they got some money from the CHIPS Act, which I thought was the greatest piece of legislation to come out of the Biden administration. We do need to beef up our semiconductor industry. Mm-hmm. So there's a lot of money out there, billions of dollars, on trying to get semiconductor activity here in America. So Access was tapped outside of our industry,
right,
to create an educational platform to train people on the basics of AI and learning and stuff, just like they do with the basics of learning.
Sure.
So it's a learning organization.
I like it.
So it's a good way to get some revenue in to help feed back this nonprofit machine that helps train people into positions in our business. And so there's a lot of good things going on at Axis. I'm really, really happy to be part of that board.
So it's for all positions. It's not just for loan officers. It's for
the 4 main ones that I mentioned. Yeah.
Okay. All right. That's fantastic.
Yeah,
I love
that's
it.
great.
Yeah, it is. UWM does something like that for loan officers, where they bring them in, they train, but then they also have their processor and that sort of thing training. And so you could go in with literally no experience and come out of there with some base knowledge.
What I like about that is that as leaders, right? When I was referencing the Salesforce thing with Mark Benioff,
yep.
and Matt Ishbia is a really good dude. Like, I know that he's very people think things of him, but like off the basketball court when he's not trying to dominate, right?
Yeah,
he's actually a good dude, and that is proof. Yes, it does serve his business, but he doesn't have to do that.
No,
he doesn't have to train new people. He doesn't have to spend money on training new people. Well, it's a very good thing that he does that, and that's what leadership needs to do within our industry, is continue to evolve and find ways to help bring up a new generation of workers and teammates and loan advisors and all that. So I really commend him.
Yeah,
for that.
and we do need more of that. We do need to bring in more youth into this business, because it is difficult to break into.
I think it's getting harder because when you're new in the business, it's harder because you walk in with no pipeline, right? Portfolio, right? No database, whatever you want to call it. And so you have to grow that. And that takes time, right? But it's like a lot of jobs in financial services. People work for insurance companies or wealth management advisors. It's like you spend your first couple of years making phone calls trying to build a book, and it's a hard thing. But the cream rises to the top. So you're trying to cultivate talent, find who's going to be in there, and you're going to find that next 80-20, right? That 20% that does 80% of the work. You're going to find that next person, but they need someone to open the door for them and get them in, and let them progress.
Yeah, I love it. Well, you guys are doing some amazing things. You specifically, I love watching your LinkedIn videos. And if you haven't seen KP on his LinkedIn videos, you would recognize him by 2 things. One, in every video, he says, coming to you from, and then he does a little twirl with his. Where did that come about?
I don't know. I just whipped it out one time. I guess I get fired up. It's like, coming to you live from Corona, California. It's like let's fucking go. It's like, let's go. I want people to get fired up. And then I bore them to death with a bunch of economic bullshit.
Actually, it's not boring. Yeah. And so
it is to some people.
Yeah. If you haven't found KP on LinkedIn, find him and follow him there, because he does drop a lot of great information every single week. But if somebody wants to get a hold of
twice a week. Yeah, every Monday and Thursday.
Okay, well,
I try to.
Out.
Sometimes 3. Just message me on LinkedIn.
Yeah.
I read them.
That's it.
Yeah.
Okay. You read all those DMs, even the in-mails?
Yeah.
Oh my God.
I know. I don't have an admin. I book all my own travel.
It gets lost though. All those LinkedIn, the automation there.
I can tell when it's a bot.
Yeah.
I can tell.
Okay.
Yeah. So
all right. That's it. Just reach out to you on LinkedIn.
Yep.
Okay. Fair enough. Well, guys, that's another edition of The Blueprint. And today I'm telling you, I'm overwhelmed. I took a lot of notes while we were talking. There was some great information here. I hope that if you just skipped ahead, that you go back and you listen to it again, because I'm telling you, you're going to learn a lot about the mortgage industry, about inflation, about the economy. Thanks a lot for dropping all that knowledge today. And if we brought you great information, things that you loved, please like, share, follow, subscribe. All that really helps. And we'll see you next time on The Blueprint.